Hey everyone, long time no see, about a year since my last upload. I have been uploading loads of videos, but I've been doing so on my Norwegian channel, which is my mother tongue. So I'm afraid most of you won't understand a word that I'm saying, unfortunately, but I thought I'd give you some videos over on this channel as well. Sorry for the long hiatus. Let me know if there's something in particular you'd like a video about. Otherwise, I'll just jump straight into it with a talk on dividends and what the deal really is with dividend investing. If there is one aspect of investing that I feel like is misunderstood, it must be dividends. Dividends is a great thing, and reinvested dividends has accumulated over time to represent a majority of investors' return, more than actual price appreciation, depending a little bit on what time period and market you look at. Dividend is simply a redistribution of a company's profits after reinvestments and costs back to its investors. And companies that pays a dividend tend to be larger, more well-established companies with stable cash flows. But of course, here there are many exceptions, but that is generally the rule. What you want to find is a company that is able to pay a healthy dividend while also maintaining or increasing the payouts over time and give you some organic growth and price appreciation in combination with the dividend. Companies can pay out a yield of 10-15%, so 1% or more a month, but it will not do any good if the stock price doesn't appreciate, and very high yields usually comes at a cost and can carry with it stagnant growth for the company and stagnant price appreciation. So again, historically the best dividend payers are those paying a moderate dividend who's been able to increase it over time as the share price also appreciates. Dividend is not free money. It is actually a redistribution of your own holding back to you. So if a share price is completely stagnant, but a company keeps paying out a dividend, the share price will actually fall as the dividend is being paid out. Not the exact same amount, but roughly the same. So what you need is a share or shares that appreciates while the yield stays the same, which means you're being paid out more and more as your holding grows, not just having your holdings being cannibalized by dividends while the stock price moves nowhere. To show how potent this combination of price appreciation and maintained yield can be, I'm going to use an example. Let's say you invest in a company and you invest $10,000 and you receive a 2% yield. That will grant you $200 a year the first year you're investing. Let's say, however, that over the next 10 years, the stock price doubles and you now have $20,000 invested. The yield, however, has been maintained at 2%. So the companies has increased their payouts to maintain the yield. You're now getting $400 a year, which is actually a 4% annual return on your initial $10,000. So a moderate yield will quickly outpace a high yield if it can be maintained while prices appreciate. You see, the yield of a share fluctuates all the time because it is given by dividing a company's market cap by how much dividend they paid out last time they paid a dividend. But since the market cap changes every day and every week, but a company only pays out dividend 4, 2, or even just one time a year, the yield will fluctuate based on what day you check it. So if a company paid a dividend 2 months ago, but the stock price has moved up since then, the yield will have gone down with the same amount as the share price went up, because the relationship between the company's market cap and how much dividend they pay out has changed. This can give investors a sort of a comforting effect where when prices go up, you're making money anyways, so you don't mind the yield on your shares going down. But when prices fall, you get a higher yield. And you can technically buy your way into you can buy new shares which will carry a higher yield because prices have gone down. So it's sort of a stabilizing factor, and if nothing else, can actually be a nice sort of psychological comfort for dividend investors when the market rises and falls. But can't a company simply invest the money they would have given to me back into the business and grow organically that way? Maybe, and a lot of companies do that, and a lot of the top performers, see the Mag 7 for example, chooses to do just that. They reinvest in the business aggressively instead of paying a dividend. But as mentioned, companies that pay a dividend has historically shown to do better than those who don't pay. Maybe companies become more financially disciplined when they pay a dividend. Maybe investors can invest the money better than the businesses can. Or maybe companies paying a dividend attracts more disciplined and sophisticated investors. Who knows? But the result is the same. Dividend payers have outperformed non-dividend payers. In order to get the full accumulative effect of dividends, it needs to be reinvested into buying new shares as soon as possible. The worst thing you can do is letting dividends just sit in your account or paying yourself a salary with your dividends. The whole point of dividends is pretty much gone at that point. So you need to buy more shares with it. Of course, if every time you trade, you incur a transactional fee, and your dividends amount to very small amounts, you might want to save them up and invest a good chunk at a time, or just throw the dividends in with the next chunk of money that you were going to invest anyways to make the investing a little bit more efficient. But the principle that goes for all investing goes for dividends. Time in the market beats timing the market, so you need to put your dividends to work as quickly as possible. Many high-yielding shares tends to be within certain industries like oil and gas, shipping, energy, bank and finance, infrastructure, and so on. So if you're a dividend hunter, you should be aware of your concentration within certain industries. You might not want to have all oil and gas companies or all shipping companies. Some of these industries are very cyclical, and they can actually be quite hard to get a grip on as a retail investor. So be aware that industries where there's flush with dividends and it's just a buffet of dividend payers can be a little bit of a trap. They can be cyclical, and the growth might not be all that, or the growth might be very unstable. Therefore, the companies choose to pay a dividend instead. So be aware, don't chase dividend blindly and end up with a portfolio with just dividend and no growth. So dividends are great. Go out there and find yourself some strong dividend payers, but don't chase dividend blindly. You want to find companies who have the balance sheet, cash flow, and revenue growth to maintain and ideally increase the dividend over time. Be sure that you don't end up with an overconcentration within certain sectors or certain types of companies. And personally, I wouldn't go all out dividend, but it is a great addition to your portfolio. And as I said, if you do it correctly, dividends can make up a huge amount of your returns and can make it very easy to beat the market and many other investors if you stay disciplined. And dividend paying investments or shares have tended to do better than those who don't pay a dividend. Let me know what sort of dividend payers you have in your portfolio. I will be sharing my updated portfolio very soon. What's your take on dividend? Do you subscribe to the dividends dividend irrelevancy theory, which basically says dividend is pointless and is just giving your money back to you and will not add any returns? Or do you look at the historical numbers and say, you know, the proof is in the pudding, dividend is a great thing and you should include dividend in your portfolio? Personally, I have some dividend payers, but mostly growth, and again, the top performers, the huge run-ups, tend to be in companies that don't pay a dividend, but in the long run, it's probably good to have some. Thanks so much for watching this video. There will be a couple more coming. I've already got them planned, so I can guarantee you that. Again, give me ideas for videos if there's anything you want to have a video on. Thanks so much for watching. Hope I see you in my next video as well, and stay safe out there.